Good afternoon, everybody. How are we doing today? If I can just get a quick audio and video check, let me know that you can see my screen here, and we're coming through good. Hey, Mike, how you doing? Hey, Bill. Yeah, Bill, this webinar is being recorded. I'll show everybody here in just a moment where that recording will be. So speaking of, I'm going to get our recording going right now so we can get moving forward. So I hope everybody, by the way, hope everybody had a great holiday weekend, a great Easter weekend with family and friends and loved ones, and enjoyed a long 3-day weekend there from trading. So, all right, well, welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com. And today we're going to talk about using the Nadex strike ladder for trade management. And for some of you, you may be familiar with this, and you may already use this. For some of you that are new, you may not even know what the strike ladder is or what I mean by that or how you can use it. And I know some people think, well, the strike ladder's just there, you know, to choose which binary I want, and how in the world would I use that to manage a trade? And we want to talk about that just a little bit here. And let's get our disclosures knocked out so we can jump right in. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. This presentation is for educational and informational purposes only, does not take into account your financial situation, and is in no way a recommendation to buy or sell or solicitation to buy or sell futures, options, bonds, Nadex binaries, or Nadex spreads, okay? And as always, past performance not indicative of future results. One other thing to keep in mind, any examples that I give you here today on the Nadex platform, or how to utilize the tickets on the Nadex platform to enter and exit orders, are strictly just me showing you how to use the platform. It's in no way a trade recommendation. It's in no way a recommendation of a direction of the market or direction of a trade by any means. It's strictly just showing you how to use the platform and enter and exit orders. So, like I said, I'm with apexinvesting.com. Apex and Nadex, two complete different companies. Nadex is an exchange. Apex, we're an online company of traders helping traders. Got over 20,000 members. We've got live trade rooms and trading strategies and systems. But we're traders just like you. We trade Nadex binaries and spreads every day, and we're a Nadex education partner, and we do these application and strategy webinars for them. And what we're here for is to just help you understand what is Nadex, who is Nadex, give you some free education on how to utilize the Nadex products in your trading. And, it's just free education for you to take advantage of. And some other free stuff I want to make sure you're aware of. If you hop on over here to nadex.com, a couple things I want to point you towards. If you go right here under the Trading Platforms tab, you can go right down here to Demo Trading Platform, all right? And it'll just take you a quick minute to fill this out. You just select a username, enter some quick info, and hit Open Demo Account. So even if you do have a live account already or don't have a live account already, either way you can still get a free demo account. Nadex will give you a free demo account with $25,000 and of demo money, and you can go in there. What will happen as soon as you hit submit here, in just a few moments, you'll get an email with a temporary password, and you can log right into the Nadex demo platform. Once you do that, you can go right up here to My Account, and then go down here to Settings and Password. And you can change that temporary password they give you to whatever you'd like it to be. All right, that way it's easy for you to remember, and you can go through and utilize the demo platform to test any new strategies, any new systems, get familiar with Nadex using demo money, work out any kinks, master your strategy and systems, and demo before you switch over to live money, okay? And don't utilize your live money while you're learning. That's a very expensive education, and there's no reason for that, because we offer you these webinars. Nadex offers you the demo platform. Also, when you're on the Nadex site, just a couple other quick things here. For those of you that do have an account, when you're here on the login page, if you're like me, you sometimes forget your username or forget your password, and you can just click right here, forgot your login details, and you can make sure that you get that sent to you. Another area I want to direct you to here, and I'm going to reference back to this here in a little bit, but right here under Learning Center, you can go right here to webinars, and that will show you all the upcoming webinars. But you can go right here to Webinar Archive, all right? And then right here, filter by presenter, just click down and find us, Apex Investing Institute. And for those of you that might have not been with us over the past few weeks or few months even, this is a great place for you to go back and catch up on some great stuff. You can even go back here a few pages to, I believe, page 3 right now, and you'll find, page 2. For those of you that are brand new, I want to direct you to a couple of webinars right here. These two, Nadex Binaries 101 and Basics of Nadex Spreads. If you're brand new, you're not even sure what a Nadex binary or spread is, each one of these webinars, I kind of handhold you and walk you through exactly what is a binary, what is a spread, how does it work. These are kind of the basic videos. These are the foundation of where you want to start. And then from there, you can go through some of these other webinars about, hey, now that I understand what a binary is, how do I choose the right one? What are some different strategies? How can I trade them part-time and at night? Just a great, just a great library here of free information for you. So take advantage of all these free tools. One thing I want to make sure of though, a couple weeks ago, I did a webinar right here, breaking down the binary, talking about binary pricing. And I talked a lot about how the price of a binary moves. We talked a lot about time decay, how the price of a binary can move much quicker towards 0 or towards 100, closer to expiration. And I'm not going to go in and review that today, but it's something that you need to have a really good understanding of to be able to utilize what I'm going to teach you today. All right. So if you missed, definitely keep up with us here in this webinar as much as you can. But if you missed this webinar, it ties into what we're going over today, and you really need to know that to make this work, to make what I'm showing you today to work. All right, because you need to have a good understanding of time decay and time till expiration and how that affects the price of a binary. Okay, so like I said, I've been with Apex now for about 3 years as head of operations. I've got a background in banking and as a licensed stockbroker, and I'm a trader just like you. All right, so again, that's what I'm here for today. It's just to direct you to some free education and show you some ways to utilize the Nadex strike ladder for trade management. We want to talk about how and when and why you would want to take profit orders with Nadex. And I just want to talk to you a little bit about thinking outside the box with binaries, okay? And thinking beyond just 0 or 100 at expiration. Like I said, we're not going to go through and, dig into, spend a whole lot of time on the basics of binaries. But in a nutshell, we all know, or most of us know, what a binary contract is. And if you're here on the Nadex platform, and as an example right now, I have up the Wall Street 30, which is the Dow. These are the 2 p.m. expirations, okay? And each different one of these strike prices right here is a different binary contract. And all a binary contract is simply a statement. If I was to click this one right here, all it is a statement, right? The statement says the Wall Street 30 will expire greater than 20,509 at 2 p.m. today. That's it. That's just a statement. The Wall Street 30 will expire greater than this price at 2 p.m. That either will or will not happen. This statement will either be true or false. It's binary. Yes, no, 0, 1, true or false, right? And if I think that this statement is true and I decide to buy the binary, because I think the statement will be true. If I think the statement's false and I think the Wall Street 30 will expire less than, it'll expire at 20,509 or less, then I'm saying the statement's false and I would sell. right? So in a nutshell, that is a binary. If I think the statement's true, I buy. If I think it's false, I sell, okay? Now again, there's a bunch of different strike prices to choose from here to say, hey, I think it's true or false. It'll be above or below that price. At expiration, a binary is either worth 0 or 100, okay? If I was to buy this binary for $59.29, that means I'm risking $59.25. The most I can make is $40.75. If I add these two together, what will it equal to? $100, right? So that is a binary contract, but I want you to think a little bit past just 0 and 100 at expiration. We want to talk a little bit about using binaries as a directional instrument. So let's talk about what is the strike ladder. Well, we're looking at it right now, okay? If I go in here and I choose any market, you know, if I go in here and I choose indices binaries and I want to look at the US Tech 100, okay, which is the, you know, derivative of the NASDAQ, okay? Shows me all the different binary contracts expiring at 3 p.m. or I can choose 2 p.m. Okay, but this is the strike ladder. It shows me all the strikes available. And if you've been with us in the past, and even last week, we talked a little bit about all the different types of binaries. We talked about in the money, out of the money, and at the money binaries, right? We talked about drawing a line in our head for the at the money binary, okay? Does everybody remember what an at the money binary is? What that is when the strike price of the binary contract, for example, 5449, when that strike price is right close to the current underlying price, the binary is going to be worth about 50 bucks approximately when it's right on, right? Because it's right on the fence, right? If it expires above it, it's worth 100. If it expires below it, it's worth 0. What's in between 0 and 100 is 50. We talked about when we look at this strike ladder, kind of drawing an imaginary line in our head or on the page here that, okay, right here around this $50 price, I'm going to draw a line there. That's where the market is right now, okay? If I'm looking to buy, then everything above this is out of the money. Everything below this is in the money, right? If I'm looking to sell, it's the opposite. Everything above here is in the money. Everything below here is out of the money. All right, and that gives us a good separation there of, you know, where we're at. Okay, again, we want to look at a different one. We're going to look back at the Wall Street 30, at you know, at the Dow. Let's pull those up here. I'm going to see which one right now is the best examples for us to use on a couple things I want to show you here. Okay, so who can tell me right now what's the, well, it's kind of right in the middle, right? I was going to say, which one is the at the money binary? Well, the market's at 512. We got a 507 and a 519. So the market's kind of right in between there, right? So let's look at another quick example here, because I want to really make sure you guys see here what I'm trying to show you. Okay, who can tell me what is basically the at the money binary right now? Where is the indicative at? 1379. This strike price is at 1379.7. See that? Okay, and right in the middle between these two prices is right around $50. So, all right. How, you know what, no, that's just not quite the example I want to show you. Let me just check one other thing here. I want to keep this as simple as I can for you. Okay. Well, we might just have to do that one. Okay. So what is the difference here between this strike and this strike? Okay, right now during lunchtime, they're a little bit, let's see, we got 1379.7. Right here, we've got 1381.1. Okay, so how many ticks or points difference is that? Who can tell me? And so I was looking for one of the even number ones to kind of make this a little bit easier for us here, but we don't quite have, all right, well, let's just use this one, okay? Let's just say that this is right now the closest at the money binary, right? 519 and 514. So how far apart are these right now? 519 to 531. Got 12 points, right? So let's say I was going to buy, all right, because I think the market's going up. And I buy this for $46. And if the market goes up, okay, if the market goes up 12 points, what then, which binary then would be more like the at the money binary? Well, then this next binary up, 12 points up, would be the at the money binary, right? Does that make sense? Because if right now this is the closest at the money binary, if the market goes up 12 points, then this one up here is going to be closer to the at the money binary, right? And then what if the market goes up 24 points? Well, then this strike price here is going to end up at that time being the at the money binary. Everybody follow me there? Pretty basic, pretty elementary, okay? So when we look at that, here's a little something that you can do. If you realize that if the market goes up 12 points, basically if the market goes up a strike or up 2 strikes or up 3 strikes, then these price values kind of move up, don't they? Because this one here that's around 50, well then suddenly it'll be these that are around 50. And if we move up some more, it'll be these that are around 50. That makes sense? Because we know that the at the money binary is always going to be around $50 until right at expiration, right close to expiration. So what we can do there is we can utilize this strike ladder for short-term moves. What do I mean by that? Well, let's just say that, you know, we're looking at the market and, you know, our charts, our indicators, our strategy or system is telling us that the market's going to move. And we're looking at this for short-term moves because, again, if we get closer to expiration, we know that these values are going to move a lot quicker, right? These out of the money binary is going to move towards 0 a lot quicker. These in the money binary is going to move towards 100 a lot quicker. If you're confused on what I mean by that, watch that webinar from last week of breaking down the binary price, okay, and it'll clear that up. So what I'm talking about here with you is when you've still got a decent amount of time till expiration. You know, right here on the 3 p.m.s, we've got 1 hour and 40 minutes, okay? On the 2 p.m.s, you know, we've still got 40 minutes. Now, you know, this is not something you want to utilize when you only got 5 or 10 minutes left, right? So, but let's just look at this example. Which one is the at the money binary? 509 strike and 510, right around $50. But if the market moved up 12 ticks, right? Here we're at 12 ticks difference. Then it would be this one that's priced more at closer to 50 and 40, right? So we know that when we're looking at it that way, like if we're looking to buy, if I was to buy this one right now for $49.75, the market makes a quick short-term move up 12 points. Then suddenly this value becomes this value. So what that means is if I look at buying it right here and then imagining that it moves up a strike, then that means I would be able to sell it after it moved up a strike or moved up 12 points. I'd be able to sell it back for what? For this price, right? So if I bought this for 58 and it moved up enough points to move 1 strike, I could sell it for 69. You see that? If I bought this one right now for 34 and it moved up and made a quick move, 12 ticks up, to move up 1 strike, then I'd be able to sell it for 46. Does that make sense? What if I bought this one right here for $34, or now $38, and the market moved up enough to move 2 strikes worth? Well, then I know I could buy it for 38 and sell it for what? 66. Everybody see that? Okay. Everybody see how that works? All right, and it's just the opposite on the sell side. If I sold this one for 27, saying the market's going down, okay, and it went down a strike, I could buy it back for 18 or 29 and 20. Does that make sense? Okay, and I know some of you are like, oh, I never thought of that. I was just looking at, do I want to buy this one or this one, and looking at my risk. And you're only thinking about, okay, if I buy this one for 55, it'll expire. I'm risking 55 to make 45 at expiration. You're thinking just 0 and 100 at expiration. But if you're looking for shorter term moves of, hey, I think the market's going to make a move and I think it's going to be a quick move, but I don't know if it's going to stay up there till expiration. But what could I potentially make if the market did make a move of a full strike, or 2 strikes, or 3 strikes? If it moved X amount of points when I've still got 37 minutes or an hour and 37 minutes to expiration, what could I expect to potentially profit? Okay. Does everybody understand that? If I lost anybody right there, please speak up and tell me now. Everybody understand what I'm showing you there? How when the price is at a certain level, but then the market moves up 12 ticks, well, then it's this binary that's going to be priced like that. Now, again, that will change and move a little faster the closer to expiration you get. But when you've got a long time to expiration, you can utilize this to see what the value will be. Okay? So let's talk about that a little bit. Let's say, hey, I'm not looking to hold a binary till expiration. I want to get out of it early. I want the market to make its move, and then I want to get out of it early. All right, and I'll show you here in a few moments how to do that. So I think the market's going to move, whether I'm using deviation levels, support and resistance levels, Fibonacci levels, higher lows of yesterday, whatever it may be. Okay? Whatever it may be. Okay? So I'm expecting a certain amount of move. Okay? So, Marvino, if you take a look at last week's webinar, we talk about how the pricing of binaries, how the time to expiration can affect that. But in general, it's a probability-based pricing of the probability of will it expire above or below that strike. Okay, and right now, as an example, this strike is 531. But the market's at 514. So the market's below that strike. So it's priced at 30 and 37, so about a 33% probability. But if the market moves up to 531 and it matches this strike, well, then this binary has to be priced around 50 because it's kind of a 50-50 probability. Is it going to expire just above it and be worth 100? Or just below it and be worth 0. And since we don't know that yet, it's kind of right in the middle, kind of 50-50. Does that make sense? Okay. And then if the market moves up even another 12 ticks up to 543, well, then this binary, the probability of this binary expiring and the money becomes a lot higher because the market's already up here at 43. If you buy this one, you're just saying it has to stay above where it already is. So it's a much higher probability. So it's going to be priced closer to 58 or 60. Okay. So let's just say, for example, that we're looking right now and our strategy or system is telling us, okay, we think that the Dow is going up and I think it's going to go up to a previous level or support and resistance, Fibonacci, whatever. So I think it's going to go up 2 strikes. So I think it's going to move 24 points. Well, okay. if I were to buy this one right here for $5, because hey, I'm great with risking $5 to maybe make $95 at expiration. Well, but my expectation is only 24 points. 514 plus 24 is not 591, right? I'm not expecting it to go all the way up to that strike. But if the market does move up 2 strikes, this would raise in value. So if I bought this for $6.75, the market moves up 2 strikes, what could I sell it for? What could I sell it back for? I can buy it for $7.25 and sell it back for what? $11.50. That makes sense? So I'm making about $4 there, right? Okay, well, what are my other options? Well, if I'm expecting 24 points, 2 strikes worth of move, I can buy this one for $11 and sell it for about 20. Okay, so I'd be making, you know, about $9 or $10 on that binary. Okay. This one I can buy for 18, sell it at 32. This one I can buy for 40, but only sell it back for 46. Or I'm sorry, 41 and sell it back for 59. Okay, now I'm making $20. Okay, I like that better than 4 or 9. Here I can make 20. Okay. So do you see that right there? I can buy it for about 30 and sell it for about 46. Okay, so now the price is adjusted. Okay. But what about here? Here I'm at 52 and can sell it for 70. All right, so I'm still getting like $18, $19. I like that. Now here I can buy for 74, but I'm only going to get 85. Here I can buy for 84, I'm only going to get 91. You see how it starts to slow down? Remember down here, these deep out of the monies? Remember it was just a handful of dollars, right? Remember right here, these deep in the monies, they get a lot closer because they slow down when they get closer to 0 or 100. Does that make sense? Did you see that this middle ground in here had the higher dollar amount differences? You see that? Okay. I mean, look at here. If I buy this one for 94 and it moves 2 strikes, I can only sell it for 95. Wait a minute. What's going on with that? Or buy for 88 and sell for 93. I don't like that. You know, or 5 and 8, maybe I don't like that. But here in this middle ground, there's a little more room. Does that make sense? Now, sometimes some of you may say, hey, I have other strategies where I really like these deeper in the money binaries when I'm just not expecting much of a move and I just want to let time run out. Absolutely. Well, what we're talking about here is when I'm looking at short-term moves and I want to look and see which binary is the best, which one, you know, if the market does make that move of 1 or 2 strikes, which one do I potentially have the most to gain from? Okay. Now, is there some of you that have never really thought about it that way? Is there anybody here that's never really looked at the strike ladder that way or even thought about using it that way or realized that you could? Does that make sense? If anybody has any questions here, let me know. You know, some of you are saying yes, some of you are like, no, not really. But that is the way to utilize that because, you know, some of you are like, well, I just love my in the money binaries. And I do too, okay? I love in the money binaries for certain strategies. But for a short term, you know, get in and out type strategy, you may not have as much of a potential move there because it's not going to move as fast closer to 100. Why do you think that this one right here, buy at 29, sell at 47, why do you think that one has such a big move? Why do you think this one from 43 to 62 has such a big move compared to these others? Because either one of these, if the market makes that move, they're suddenly what? in the money binaries because they're suddenly, the market is above both of those strikes. So you not only have, Mike just said it, you have time and price working in your favor. Because when the market gets, when you're down here with these out of the money binaries, you need movement to get you over the strike price. After you're over the strike price, you don't necessarily have to have any more movement. You just need time. You just need the market to stay above that strike price till expiration. So even if there's not a lot of movement, time's going to work in your favor. Okay, so that's why you've got a little more volatility here in the middle. Okay, so that's something you definitely want to keep in mind when you're looking at potential short-term moves. Okay, is to look and see which binary could potentially get me the most return out of a 12-point move or a 24-point move. Okay, so one other thing to look at here though, you want to also not just look at the dollar amount, but you could also look at it as a percentage, right? For example, you look right here, okay, I can buy this for $7.25. I can sell it for $12.75. Well, that's making $5. Well, I don't want to make $5. Here I can, you know, buy it for 40 and sell it for 60. Ooh, I like that, 20 bucks. Well, what percentage is that? If you buy for 40 and can make 20, that's about 50%, right? But technically, what percentage is $7.50 compared to $13? I'd have to put it in my calculator here, but it's more like 70%, right? So you have to also look at the fact of not just the dollar amounts, but the percentage. What gives you the best, you know, risk to reward return? Because another way you can look at it is, well, here I could get this one, buy it for 41, sell it for 60. I'm risking $40. Well, here, these are $7.25. But how many of these could I get for the same risk of $42? I could get 6 of these, right? I can buy them for $7.50, sell them for 13, you know, make about $6, but I could get 6 of them, which would be $36 in profit. Here would only have been $20 in profit. So you can't just look at the dollar amount. You also got to look at the percentage, the rate of return, and the two risks together. Did I lose anybody there? Because that's a really important key. Did everybody catch that? Okay, where, hey, here to here, I can make 20. Here to here, I'm only making 5. Forget that. I don't want to make 5, I want to make 20. Well, but what's the percentage of return? And how many of these, here you're risking, you know, 40, 45 bucks. How many of these can you get for the same risk of 40 bucks? If you get 5 of them. Okay, does that make sense? Okay. So, Stephen says, what is the target to sell after the buy? Well, Stephen, that depends on what your chart's telling you. Okay, if again your strategy or system is showing you, you know, that the market's going to make a move of 2 strikes, meaning about 24 points. Okay, SG says, why are we dropping down 2 strikes in this example? SG, I was just using the example of if you think the market's going to move about 2 strikes, meaning about 24 points. Okay, let's say from where the market is right now to the level you think it's going to go to, whether that's a support and resistance level or a Fibonacci level or deviation level, whatever it may be, a high or low. If you think the market's turning around and going to go back up to a certain level, you can see that, okay, that level is 12 points away, 24 points away, 2 strikes, or 36 points away, so about 3 strikes. So that's how you're targeting that level to look and say, okay, if I'm expecting a 20, 25, 30 point move in the market, well, if I was looking at this binary right here and the market moved 30 points, well then this binary, would be priced the way this current binary is. So I know I can buy it for this, and if it makes that move, sell it for that. Okay, so that's why we're looking at, you know, as that example, we were just talking about a 24-point move, so looking down 2 strikes. Okay, so that's what we were looking at there. Okay, yeah, Bill, you can check that out. I think I even talked about that a little bit last week, a little bit. The indicative price, okay, is always going to be a little bit different than what you see on a chart or on a, you know, online chart or a Reuters. I mean, there's a million different feeds out there that'll give you a different thing. But you can go on the Nadex website and they'll talk about how the indicative is figured. Okay, it's an average of the last X amount of trades. They take out the, you know, highest and lowest and average out the middle. That way you don't get caught in quick spikes right at expiration. Okay, so it's always going to be just a little bit different here, but that's why it's priced right there for you. Okay, or the indicative's listed right there for you. Okay, so does everybody understand how you can utilize the strike ladder here to potentially see what a binary would be worth if the market makes a certain move? Okay. Everybody see that? We're going with that. Any particular questions on that? Okay. Yeah, and Bill, by the way, when you check that out on the, you know, on the Nadex side about how the indicative works with the, you know, with their instruments, it's the same formula they use for the expiration value. Okay. Again, that way it's averaging those middle prices so you're not getting caught in a quick little spike there. Okay. All right. So if I'm looking at that move, and I'm looking for that move and I select which one I want, again, I'm not taking into account just the dollar amounts of the move, but also the percentages, the percentage of return, okay? Because again, you know, if I'm looking at, okay, I can buy for around 7, sell for around 12, $5 is nothing. Well, but that's also a 70 or 80% return, right? Okay, so you really have to look at that and compare your different options. All right, and let's just, so for example's sake, let me just pull up a YM chart here, chart of the Dow. Okay, so right now I'm showing the Dow is up here at 20,533. Okay, and there's no indicators on here. There's no directional, and I'm not in any way recommending a trade or telling you the market's going up or down. I have no idea what it's doing. I'm not looking at that. This is strictly just an example, not a recommendation by any means. So let's just say though, the market's up here and whatever strategy or system I'm using is telling me that the market's going to turn around, and I think it's going to head back down to this 0.7 deviation level. Okay, just as a complete example. So, and I think it is going to make that move here within the next, you know, hour and a half. I don't know if it's going to happen in the next 10 or 15 minutes, but I think it's going to happen, you know, pretty quickly, say within the next hour and a half here. Okay, or maybe I think it's going to happen in the next 20 minutes. Well, the market's up here at 534. I think it's going to get back down here to the 475 level, right? Okay, just as an example. So I think the market's going to get back down to the 475 level. So let's pull up Nadex, and where is a binary around 475? So that means if the market's up here, okay, actually let's just, you know what, let's do this differently. Let's just stick to the buy side because we've been talking about that. Say the market's right here, and I think the market's going to go up to this deviation level up here at 630, right? So I think it's going to make that move, and I think the market's going to end up here around 630, 20,630. Okay, so I'm looking at the strike ladder, and all right, well, I don't have a binary up at 20,630. The highest one I have is at 603. Okay, so I look back at my chart, and and I say, okay, well, there's not a binary up there, but there's a binary right here at 603. All right, so you know, even better, because I think that the market's going to go higher than that. But if I'm right and the market gets here to 603, okay, and it makes a, you know, pretty quick move, you know, I've got, you know, an hour and 20 minutes to expiration. I'm not looking to hold it all the way to expiration. I'm just looking to take advantage of this move. When the market gets to 603, what do I know approximately, without even looking, what do I know approximately that that binary will be worth? If the strike price of 603 is right at the same as the market price, that binary is going to be worth $50 approximately, right? Because it then is the out of the money binary. So if I look back over here, 603, what can I buy it for right now? 50 bucks. I mean, $5, right? And I know if the market hits 603, it's going to be worth approximately what? Approximately $50, right? Okay. What if I'm looking at the market right now and I say, okay, the market right now is at, you know, 538. Let's just call it 540. And I think it's going to get up here into the 565 range. I think it's just going to go up a little bit more, about 20, 25 ticks, 20 or 25 points. Okay, well, where is 20 or 25 points? It's at 574, right? Okay, well, what's that around 574? Well, I got a 579 right here. So if I was to buy this for $14 and know that the market, you know, or I'm expecting the market to go up about 25 points, which would be one strike, then two strikes, I can buy this one for 15. I know I can sell it back around 29 at that point. Okay, so does that make sense? So when you're looking at your chart and your strategy, and, you know, again, whatever levels it may be that you're using, when you want to target a certain level, if you think, hey, this is what I'm talking about kind of step outside of the box of just thinking about expiration and just thinking about 0 or 100. When you feel like, hey, I think the market's going to go back to this level, or the market's going to end up at this level. Okay, well, what is that level? What is a binary currently priced at that level? And what will it be at that level? Okay, all right. So let's just say, for example's sake, that I want to go in and I want to buy this one right here as an example. Again, this is just strictly an example to show you how to do this. All right. So let's just say, as an example, I wanted to buy this binary at $5.50. Okay. So I bought it, right? You see it there in the open positions. I bought it. And I'm expecting the market to go up about 2 strikes, right? Well, then what is it that I can sell it for? Just 2 strikes up. Or no, I'm sorry. In this example, we were looking at very different. Hold on. I'm sorry. Let's use a different example. If I was to buy this one right here for $24, okay, buy that for 24 bucks, and I'm expecting the market to go up about 25 points. So that's going to be 2 strikes, right? So if that happened, I go down one, I go down another. What can I sell it back for? About $40, $43, right? Okay, so that's what I'm shooting for. I bought it for 24. Let's say I want to sell it back when it gets to 40 and just take that profit. Okay, well, how do I do that? Well, right here, you see I bought it for $23.25. It's in my open orders. All I have to do is click that order, and it automatically opens a ticket, and it's already marked what? Sell. because I bought that, right? You see here, +1, that means I bought it. So if I'm clicking on this position to get out of it, or to set a working order to get out of it, well, then the only way I can get out of something I bought is to sell it, right? So when I click that open order, it automatically opens a ticket marked to sell, and it automatically fills it in with the current price. But I don't want to sell it at the current price, do I? I want to sell it when it gets up to $40. And then I hit place order. So my order is still valid. My order is still open. But what's down here in working orders? There's a working order to sell it when it gets to a value of 40 bucks. Does that make sense? So to utilize this type of strategy and utilizing the strike ladder, I want to look at my different options and not only just look at the dollar amount, but also at the percentage. Once I choose which binary I want, after I'm looking at the expected move of the market, I want to enter the order, and then I immediately want to place my take profit order. And that way it's set in there. And if the market gets up there, boom, there we go, right? Now, does everybody understand that so far? Everybody understand about how to use the ladder, choosing the different options, placing the order, and then immediately placing a working order as your take profit order. Okay, so Bill says, if you enter an order by mistake, how do you get out? Bill, do you mean if you enter any order as a mistake, or do you mean like a working order as a mistake? Well, I'll show you both. Okay. Oh, that one there? Okay. Remember when I clicked on this order and it opened up the ticket, Bill? Well, any open ticket I have here, if I click it, it will open it. Remember how it opens it and it fills it in with the current price? Okay. So if I have an open order, if I have an order in there I want to get out of, I could open that ticket and just have it sell and get out of it. See that? See how it disappeared? Okay. The reason that didn't happen with this order is because when I opened it, I didn't go with the current price that I could immediately sell it for right now. I changed that price to 40. Remember? So that's why it's working, because I can't sell it for 40 right now because it's not there yet. Does that make sense, Bill? How you can do both? You can cancel, you can get out of one immediately, or you can open it and change the dollar amount to have it sit in there. Because on this order, I bought it for 23. Okay, what is this strike price? 20,567. So where is that? It's 20,567. What can I sell it for right now? 17. But I don't want to sell it, so I can sell it for 40. So it's just sitting in there waiting to see if the market gets up to where I thought it would be, right? So let's say I have this working order in there. Bought it for 23, I want to sell it at 40. Okay, because I'm, looking at my chart and I see the market's here right now and I'm expecting it to get up to here. Well, what if a little bit of time's going by and the market's kind of coming up and it's not quite getting to where I want it to be? Okay, and I'm looking at the strike ladder and I'm seeing that we're getting closer to expiration, and I'm seeing that things are starting to move closer to 0 or 100, and I don't think we're going to quite get to 40. So I want to change it and get out of it at 30. Okay, well, then I can open it up and I can just change it to 30 and I amend the order. Okay, and now it's in there at 30. Okay, or if I say, you know what, never mind, market's not quite going where I want it to go. I don't want that working order in there anymore. So I'm going to delete it. It's gone. And I just want to go ahead and close my order out right now. Okay. All right. SG brings up a good point here. Let me show you a couple things here. If I was to open this, ticket right here, and I say I want to buy it it's currently at $29 and I want to buy one of them. Okay. Well, wait a minute. Now the price is at 31. So if I enter this, it just put me into working orders because I placed a limit order saying I want to buy this at 29 and I don't want to pay any more than 29. But before I pressed enter, the market went up to 30 or 31 and it put my order into working orders. And I'm like, oh, man, it's moving and I'm missing it. So let me go in here and let me delete this working order. And then let me go back over here and click the order again and click it again for 31. And I want to buy one of them. And I've got that all set. Now I want to go to place the order. And then boom, it moves up to 32. And then you're back in working order. You're chasing orders. That's what you're talking about, SG, right? That's your question there? So SG is saying, hey, is there another way to get in or out of orders immediately? Because sometimes you go into working orders when you try to buy or sell because the market moves. So you see right here, I placed a what? See it right here, limit of 31 because that's what I clicked at the time. Now it's up at 33. So I'm saying I'll buy this, but at a limit. I'm only willing to pay 31 for it. Well, right now the market's up at 39. So if I place the order, oh man, I'm sitting here in working orders. This order won't get filled unless the price comes back down to 31. And you're going back and forth and chasing orders. It's a big pain, right? Okay, a couple different ways you could do it. Okay, I'm going to show you 2 ways. So I want to buy this contract and it's at $33. I say I want to buy one. See, there it happened again. It's already up. And I would keep doing the same thing because I have a limit order. First thing I could do is click this down and just say market order and hit place order. And what it's going to do is fill me at the very best available price of when I click place order. Boom. And it'll just get me in right away. All right, see that? See, now there's 2 of them. You see that, SG? So what that means is if I make this a market order and do one of them, right now it says $33. If I place the order, okay, if I place the order, okay, it says $33. I place the order, and by the time I click place order, oh man, let me do a different one. All right, so I'm going to hit market order, not limit order. I want to do one. I want to buy it. Right now it says 46. I press buy. Okay, it filled me at 48. See that? So it got me in $2 higher, or it can get me in a few dollars lower. It's just as the market's moving like that, you're chasing it. When you say market order, it's just getting you in at the best possible price at that time. Same thing as if you want to get out of something. SG, all right? So let's say this one we bought for 48. So we open it, we want to sell it. It's already marked sell. We say, all right, let's sell it. Well, what price did it fill in at right here? It automatically is a limit order at the price that was available when we opened it, okay? And that's what you're talking about. Even there, the market can move the other way and you go into working orders. All you got to do is just hit market order and it'll just, bam, it's going to get you out at the best price. You see that? Does that help, SG? Okay. All right, perfect. I mean, there are some other ways you can do it. I mean, for example, if I were to open this right here and say, okay, I want to buy this for 37, boom. What happens if I put in here, change this and say, I want to buy it for 50? Do you think I put 50 in there? Do you think it's going to sell it to me, make me buy it for 50? A limit order is saying 50 is the most I will pay. Get it for 50 or less, whatever the best price is. Bam, I do place order. And it got me in at, oh man, I keep doing the same one. All right, let's do it this way. All right, so I could do buy. Right now it says 62. Let's just say I just said 75. All right. Did it make me pay 75? No, it got me in at 62.25. Got me in at that or less, the best available. Okay. So there's a couple different ways you could do that. All right. So does that help? Has anyone else had issues with that when you're trying to get into an order and you can't get just the right price because it moves around and you go into working orders and you're having to cancel it and go in and change, and then you feel like you missed the whole move? Very simple right there. Couple of different ways that you can get around that, and the easiest one is market order. Okay. All right, and you can go in and even customize your settings to always have a market orders. Okay. So a couple different things there. I missed a question a little bit ago. Let's see here. I'm not sure who asked it. I just want to make sure. Sharon, I think it was you. Yeah. How did you decide what price for the working order? Sharon, at the time, I was using an example of saying, hey, the market's here right now. I think the market's going to go up about 25 points. Okay. So if I think the market's going up about 25 points, how far are these strikes apart? About 12 points each. So 12 times 2 would be 24. So if I thought the market was going to move 25 points, that basically means any of these binaries that I would buy, okay, the value difference would be the difference of 2 strikes down. Okay, so in my example, at the time I'd bought it for 20 something, and if the market did move 2 strikes worth, which would be about 20 or 24 or 25 points, it showed me at that time that I'd sell it for about $43. I just put 40 in there to be safe. Okay, does that make sense? You follow that, Sharon? Like if I bought this one right now for about 30 and I expected the market to move, 12 ticks, which is the difference of 1 strike down, then I could sell it for 36. If I thought it was going to move about 25 points, which would be a difference like 2 strikes down, that would be 52. So maybe I just want to say 50 in my working order to be safe. Okay. So, all right, guys. And that's, is that helpful? I know we kind of went a little longer here than I wanted to. I know a lot of times it just feels like, well, the strike ladder is the strike ladder. It's just a list of options there. There's actually a lot more to it. Okay. That's a whole lot more to it as far as how you can utilize it to really see how the price values move, all right, and how you can use it to target different, expected moves of the market or different levels that you expect the market to go to. Approximately what it will be valued at, all right, and then you can then not just look at Nadex binaries as all or nothing, 0 or 100 at expiration. You can look at them as directional type instruments, okay? I think the market's going to move X amount. I think the market's going to move to this level. Okay, what will a binary be worth at that level? And which one do I want to go with? Okay, so yeah, Mike, we probably won't get into much of that today. We're already out of time here. As far as the various ways to determine that, again, there's a million different strategies and systems out there that, I know all of you use, and different indicators as far as, support and resistance levels you're targeting, Fibonacci levels, deviation levels, high and lows of the day. There's a ton of different ways that you can utilize that. All right. So yes, Bill, I can show you that. It's had a question here. A couple of people have asked, hey, I really, this is great information. I never thought about using the strike ladder that way. I want to watch this webinar again. Where will it be? Well, first of all, if you are registered for this webinar, which if you're on it, you were, and the link will be emailed to you. But you can go to the Nadex website, and you got to give it time for the recording to get posted up here. And you go to Learning Center. And right here you have webinars. This is a list of the upcoming webinars. You'll want to go to Webinar Archive here, Bill, and filter by presenter. And you'll want to find us right here, Apex Investing Institute, and this will show you all of our webinars, okay? And this is where the recording of this webinar today will be at, all right? But very, very important here, all right? If you want to take advantage of using the strike ladder like I showed you here in shorter term moves, definitely rewatch this webinar again, make sure you have a good handle on it, but go back and watch the webinar I did 2 weeks ago right here, breaking down the binary, because there's something that if you don't understand what I cover in this previous webinar about time value and time decay and how the prices can change closer to expiration, then what I taught you today is not going to work for you if you take it blindly. You have to take both pieces into account here to kind of connect the dots, okay? Got to kind of connect the dots a little bit. Gary says, excellent sessions, certainly broadened my focus and concept. Great, Gary. I'm glad to hear that. And like I said, a lot of people just think it's a list of options, which it is, but there's so much more that you can see. It really shows you the different value. And when you're looking at that now, you're like, how did I not see that before? Just this one's 579, this one's 567, so that difference of a move in a market will make this one become that value, and this one become that value. Oh, kind of like a light bulb, right? And you don't always see some of these things until someone shows you, and once again, that is what these lessons here are for. And that's why you definitely want to take advantage of the free education that's available to you. All right, not just in these webinars, but with the free demo account. And if you want to practice this and practice targeting levels and reversals, and figuring out the if I target this one, what will this be worth? Utilize your demo account. Okay, utilize your demo account. Check out some of these things and test them out there. Okay, guys, I hope that's helpful for you. Keep an eye out for the archive section there if you want to rewatch this video. And once again, definitely go and make sure to watch the one from a couple of weeks ago to help tie all of this together. And we look forward to seeing you next time. I believe we're on the schedule for next week. And what I'm going to talk about next week kind of fits into the previous one and into this one. We're going to talk about some of the top mistakes that new binary traders make, and even veterans, but we're going to talk about some of the top mistakes people make with binaries. So watch the last couple webinars, rewatch this one, come back and see us next week as we talk about some top mistakes to make so you can make sure that you don't fall into that category and you can piece all this together. Hope you have a great rest of your trading day here and trading week. Have a great one, and we will see you next week. Thank you, guys. I appreciate all your input and questions. Good stuff. Thank you.